This problem deals with identifying which account type each of these items are, and then on what financial statement it appears. Our directions tell us actually to select first the statement and then the account type, but we're going to do this in the opposite direction. We're going to work on part 2 here, the account type of each item, and then what financial statement it appears on. Let's begin by reviewing account types, and I'm going to click on the drop-down menu here so we can see our various options. The first option, assets, are economic resources controlled by the company, which are expected to produce a benefit for the company in the future. In other words, we're going to use the assets to help us run the business and generate revenue in the future. Expenses are the costs of doing business that are necessary in order to earn the revenues. They represent costs that whose benefit has been received. We've received the benefits of the cost. They've been used up in the process of producing revenue. Our liabilities are debts of the business, amounts owed by the company to its creditors. These are often identified by the word payable. So when you see the word payable, it's most likely a liability. Our revenues are amounts earned by selling goods or services to customers. They're considered earned when the performance obligation is satisfied, in other words, when delivery is made. And stockholders' equity represents the owners or stockholders' claims on the assets of the business. And these claims come from two sources, either from amounts that the stockholders have contributed directly to the company in exchange for stock, or amounts that have been earned by successful operations of the company. We call those profits or net income. Okay, let's begin with our first one, accounts receivable. The word accounts is used to signify on credit. So in this item, we're talking about on-credit purchases, on-credit sales to our customers, because we're going to be receiving these amounts in the future. So accounts receivable signifies amounts that we will be receiving in the future from customers who have purchased from us on credit. That represents an asset, an economic resource owned by the company. We have the right to receive that money in the future, so it's an economic resource or asset. Sales revenue. It's got that word revenue right in there, so it makes it easy for us to identify. Again, revenues are amounts earned from delivering goods or services to customers. When we use the word sales, we usually represent items or goods sold as opposed to services provided. Our third item, equipment, is another asset, an economic resource that the company is going to use to provide a benefit in the future. We're going to be able to use this equipment to help us earn money for the company in the future. Therefore, it's an asset. The fourth item is supplies expense. It's got the word expense in it, which helps us identify it as an expense. And in this case, we're talking about items that we've used to help us run the business. Remember, expenses are used up benefits. We've used up the supplies to help us earn that sales revenue. Cash is an asset, again, an economic resource controlled by the company. We're expected to use this cash to provide benefit to the company in the future. How? Perhaps by buying other assets such as equipment, or for paying for expenses that will help us earn revenues. But the focus for assets is that they're going to be used to provide a future benefit. The next item advertising expense. It's got the word expense in it, so it helps us identify it. In this case, we are using up advertising to help us earn revenue in the current period. So advertising, a used up benefit, is considered an expense. Accounts payable. We've got that word payable, and payables indicate liabilities. We said the word accounts means on credit. So in this case, we've got purchases that we're making on credit that will be payable in the future. As a payable, it's considered a liability. And then our final item, retained earnings, is considered a stockholders' equity type account. Retained earnings represents the accumulated net income, sometimes called profits, of the company, less any profits or net income that have been distributed to our stockholders as dividends, in which case it represents the stockholders' interest in the company. Sometimes we called retained earnings earned capital. So there's a few takeaways from this first part of the assignment. The word accounts means on credit. Accounts receivable is for amounts we're going to be receiving in the future. Accounts payable is for amounts we're going to be paying in the future. The difference between an asset and an expense is that an asset represents a future benefit, something that is going to be used in the future to help you run your business. And an expense is something that you've used up, a cost for which you've received the benefit in the current period to help you earn revenue in the current period. Okay, now let's go to part 2. In part 2, we're asked to identify whether the items that they've given us appear on the balance sheet or the income statement. So let's take just a brief moment to review our formulas. The income statement reports the revenues less the expenses for the accounting period. If the revenues, the amounts earned from selling goods or services, are greater than the expenses, the costs of doing business, then we have a net income. If the expenses are greater, then we have a net loss. So every one of these items that say either revenue or expense belong on the income statement. On the income statement, we find just revenues and expenses. So let's find all our revenues and our expenses and indicate that they belong on the income statement. There's an expense, supplies expense, advertising expense, also on the income statement. And I believe we've got all our revenues and expenses. So again, on the income statement, we see just revenues and expenses. So sales revenue, supplies expense, and advertising expense all go on the income statement. Our balance sheet reports the amounts of assets, liabilities, and stockholders' equity of a business at a point in time. So all assets, liabilities, and equity belong on the balance sheet. Accounts receivable we've identified as an asset. That goes on the balance sheet. Equipment is an asset, also on the balance sheet. Cash is an asset on the balance sheet. They represent future benefits. We've got a liability or debt here. We said liabilities are identified by the word payable. That goes on the balance sheet. And stockholders' equity, also part of our balance sheet. Oh dear, I'm having a hard time getting that to appear. Here we go. There we go. So we finished our first exercise, which helps us identify account type and the statement on which it appears. There will be a problem like this and another similar problem in your practice exercises for Chapter 1. Have a great day.